It is Wednesday morning. It's time to check on the markets. Tom Piotrowski, good morning to you over at CommSec. So how are we shaping up today, Tom?
Pete, we're going to take a step back this morning, down by around 0.4% according to the SPY futures. There are quite a number of factors that contributed to a broad sell-off for US and European markets overnight, bearing in mind that Wall Street was closed for a public holiday a day ago. But one of the things that you're going to hear a fair bit about in the next couple of weeks is that long-term interest rates are moving higher, Pete. Not the ones that we normally talk about. We tend to talk about shorter-dated bonds, 10-year government bonds, that sort of thing, but those very long-dated bonds, 30-year government bonds. So these are the sorts of prices that are very sensitive to budget deficits, inflation levels, and those types of things. And last night we saw a concerted move across the board higher for these interest rates for a variety of reasons. An appeals court in the US has ruled that the Trump tariffs are illegal. They're going to appeal that in the Supreme Court. But if this goes badly for the Trump administration, that'll be a major source of revenue that is then choked off, and then you've got still very substantial levels of spending, which will go over poorly with the bond market, and that's the sort of thing that stocks don't really like. So that was one of the factors weighing on prices last night. You had the Nasdaq down by around 0.8%, the S&P 500 down 0.75%, the Dow Jones was down by a half. All of those measures were substantially lower in the early part of the session. They recovered towards the end of the day. Elsewhere, there was a ruling from the US government that said that the TSMC Corporation, this is the largest contract chip maker in the world, can't sell things to China without express approval from the US government. So that weighed on the US chip sector last night as well. There was some weaker manufacturing figures in addition to all of that. So that's going to lather up to that loss at the start of trade today. We've got some GDP figures to look at locally. So the expectation is that the Australian economy expanded at an annualised pace of around 1.6% or 0.5% in the last quarter. So a soft figure here will just consolidate the view that the RBA will be cutting rates.
Just because, Tom, we've moved back into some kind of uneven footing on the markets. I noticed that gold exploded yesterday. I mean, there's that drift to the safe havens again. Is that going to be up again today?
It is. You're absolutely right. So we saw a new record high for the yellow metal. So it was up substantially in the order of about 2.5%, or 1.75% by the end of the session, $3,536 an ounce. So that move higher for the interest rate piece is contributing to that. There was some drone attacks also on Russian refining facilities last night, which is going to knock out some supply from Russia as well. So that destabilisation of affairs there was a contributor to gold prices moving higher as well.
Everything else okay this morning, Tom?
No complaints at all, Pete. Yeah.
None at all. Do you ever have a complaint, though? You never really do.
Only that I would tend to keep to myself. You don't want to bore people with your own journey of discomfort.
Whatever you say, though, I find fascinating. So I'd be open to that if you ever wanted to sit down on the couch, and I'd be the counsellor for the day.
It sounds like a cry for help, Pete, that you find it interesting. There are far more interesting things to focus on.
All right, yeah. Well, that Polish businessman might need some help this week, given the heat that he's been getting for nicking that cap. Thank you, Tom. We'll talk to you later on.